Let me ask you a question. What if the biggest thing holding you back in trading isn't the market, but something you've believed from the very beginning? Every day, thousands of traders spend hours searching for the perfect strategy. They switch indicators, they buy expensive courses, they copy successful traders, always believing that the next strategy will finally make them profitable. But despite all that effort, most of them still lose money. Not because they aren't working hard, and not because they aren't intelligent. They're chasing something that was never the real answer. The truth is, one of the biggest lies in trading has convinced millions of people to focus on the wrong thing. And until you recognize that lie, it will continue to cost you time, money, and confidence. So in this video, we're going to uncover what that lie is, why so many traders believe it, and what successful traders understand instead.
The biggest lie most traders are told is that somewhere out there is a perfect strategy. A strategy that never loses. A strategy with the perfect entry, the perfect exit, the perfect indicator. And once they find it, everything will change. That's why so many traders spend years jumping from one strategy to another. One month they're trading support and resistance. The next month they're using smart money concepts. Then they move to ICT, then price action, then indicators. Then they buy another course, then another. They keep searching, not because they're lazy, but because they genuinely believe the problem is the strategy. The reality is very different. Most profitable traders don't succeed because they discovered a magical strategy. They succeed because they mastered one strategy well enough to execute it consistently. Every strategy has losing trades. Every strategy experiences drawdowns. Even the best traders in the world lose. The difference is that professionals expect those losses. They don't abandon their system after a few losing trades. They trust their edge, they trust their process, and they keep executing with discipline. Meanwhile, the average trader sees a losing streak and immediately starts looking for something new. Without realizing it, they're restarting the learning process all over again. The market isn't rewarding the trader with the newest strategy. It's rewarding the trader who can consistently execute a proven one. That's why the search for the perfect strategy never ends, because the perfect strategy doesn't exist. What exists is a trader who has learned to stop searching and start mastering. And even after a trader finally settles on a strategy, something interesting begins to happen. They realize that knowing what to do isn't the same as actually doing it. A strategy can show you where to enter, where to exit, and where to place your stop loss, but it can't make decisions for you. It can't stop you from closing a winning trade too early. It can't stop you from moving your stop loss when the market goes against you. It can't stop you from taking revenge trading after a loss, or taking trades that don't meet your own rules. That's why two traders can use the exact same strategy and end up with completely different results. One follows every rule with discipline. The other lets emotions take control. The strategy hasn't changed. The trader has. This is where many people get frustrated. They blame the strategy. They think it's no longer working, when in reality, they simply stopped following it. Professional traders understand that a strategy is only a tool.
Just like owning the best equipment doesn't make someone an expert, owning the best trading strategy doesn't make someone profitable. What matters is the person using it, their discipline, their patience, their consistency. Because a strategy can only give you an opportunity. It's your execution that determines the outcome. And that's why successful traders spend far less time searching for better strategies and far more time becoming better traders.
This is where psychology quietly becomes the deciding factor. Most traders underestimate how much their mind influences every decision they make. They believe trading is simply about reading charts, finding entries, and pressing the buy or sell button. But once real money is involved, everything changes. Fear starts whispering that you should close the trade early. Greed tells you to risk a little more. Hope convinces you to hold on to a losing position. Frustration pushes you to take a trade that was never part of your plan. None of those decisions come from your strategy. They come from your psychology. That's why trading is often described as a mirror. It doesn't just reveal your strategy, it reveals your habits, your patience, your discipline, your ability to stay calm under pressure. Professional traders understand this. That's why they spend just as much time developing their mindset as they do studying the markets, because they know that a strong strategy in the hands of an emotional trader can still lose money. But a disciplined trader with a proven edge has a much greater chance of succeeding over the long run. The market will always test your psychology. The question is whether your mind is prepared before you place the trade. Because in the end, the biggest battle in trading is rarely against the market. It's against yourself. As traders gain more experience, they eventually discover something that completely changes the way they look at the markets. The best traders are not the ones who predict every move. They're the ones who know how to manage risk when they're wrong. Many beginners become obsessed with predicting exactly where the market will go next. They want certainty. They want to know which trade is guaranteed to win. But the market doesn't offer guarantees. No one can predict every move. Not retail traders, not hedge funds, not even the most experienced professionals. That's why successful traders don't build their careers on being right. They build them on protecting themselves when they're wrong. Before every trade, they're already thinking about the downside. How much am I willing to lose? Where does this trade become invalid? Does the potential reward justify the risk? Those questions matter far more than trying to predict the next candle. Because one correct prediction without proper risk management can still lose money, and one incorrect prediction with excellent risk management can become nothing more than a small business expense. That's the difference. Professional traders don't need certainty. They need consistency. And consistency comes from controlling risk, not controlling the market. The market will always be unpredictable. Risk doesn't have to be. That's why the traders who last the longest aren't necessarily the best at predicting the future. They're the best at managing uncertainty. Once you stop chasing perfect predictions, another truth begins to stand out. Successful trading has never been about being right all the time. It's about being consistent over time. Many traders believe they need to win every trade to become profitable, so every loss feels personal. Every losing trade makes them question their strategy. Their confidence disappears, and before long, they're changing their plan all over again. Professional traders don't think that way. They know that losses are part of the business. What matters isn't whether one trade wins or loses. What matters is whether they consistently follow their process. They execute the same rules. They manage risk the same way. They remain disciplined regardless of the outcome. Because they understand that consistency creates trust. Trust in their strategy, trust in their decisions, and trust in themselves. Over time, those small, disciplined actions begin to compound, not because every trade is a winner, but because the process never changes. That's the difference between an amateur and a professional. The amateur celebrates being right. The professional focuses on being consistent. Because in the end, the market doesn't reward the trader who wins the most trades. It rewards the trader who can consistently make good decisions day after day, even when the outcome is uncertain.
This is why talent alone is never enough. You can be incredibly intelligent. You can understand the markets better than most people. You can spot high-quality trading opportunities. But none of that matters if you don't have the discipline to follow your own rules. Trading has a way of exposing that. It doesn't reward the trader who knows the most. It rewards the trader who can consistently do the right thing, even when it's uncomfortable. Because discipline is what keeps you from taking trades that don't fit your plan. It's what stops you from increasing your risk after a loss. It's what gives you the patience to wait for the right opportunity instead of forcing one. Anyone can be disciplined for one day or 1 week. The real challenge is maintaining that discipline month after month, regardless of whether you're winning or losing. That's exactly what professional traders do. They don't let success make them careless, and they don't let failure make them abandon their process. They simply keep showing up and executing their plan over and over again. That's why discipline will always outperform talent, because talent may help you find opportunities, but discipline is what allows you to benefit from them over the long run. And in trading, the person who consistently follows a solid plan will almost always outperform the person who relies on talent alone. When you begin to understand all of this, your entire view of trading starts to change. You stop seeing it as a way to get rich quickly and start seeing it for what it really is, a business. Every successful business has a plan. It manages risk, it controls expenses, it measures performance, and it focuses on long-term growth instead of overnight success. Trading is no different. Yet many people enter the markets believing they can turn a small account into a fortune within a few weeks. They chase unrealistic returns, they overtrade, they ignore risk, and they gamble with money they can't afford to lose. Not because they're bad people, but because they were sold the dream of easy money. Professional traders don't think that way. They know there are no shortcuts. They understand that consistency is built over months and years, not days. Their goal isn't to hit one massive winning trade. It's to build a process that can produce steady results over time. That's why they approach every trading day like a business owner. They have rules, they have discipline, they have patience, and they understand that protecting their business is more important than chasing excitement. The traders who last aren't the ones looking for the fastest path to wealth.
They're the ones committed to doing the ordinary things extraordinarily well, day after day. Because in the end, trading doesn't reward those who are looking for shortcuts. It rewards those who are willing to build something that lasts.